Okay, hey guys. So this is Simon. I am here with our two Archimedes experts. We have Nat here. He's our crypto expert, and Suman, who's the expert in terms of private markets and all things pre-IPO. There's been some really exciting news recently, within the last day or so, I think, which Coinbase dropped some updated financials. And for those who don't know, Coinbase is planning to direct list and become public, I think the end of this month. Is that right, Suman? End of this month?
No, in mid this month. I think April 14th they released is their direct listing date.
Got it. Okay, so even sooner. So it's just right around the corner. So we're going to talk a little bit about what the new financials mean for Coinbase, the company, and what I guess what's on the horizon for us. And even if for me, I think I might buy the IPO, but in terms of the discussion, it's about like as investors, what are some things that we should really think about. So I guess the first kind of the major question is, from what was materially different or what updated in terms of the financials, and sort of like how does this paint the company now? I'll let you take that, Suman.
Yeah, so the company reported yesterday their expected Q1 numbers, which were extremely strong, right? So revenue of $1.8 billion from $335 billion in total volume. And that led to 1.18 EBITDA margins and 730 to 800 million net income margins. So that EBITDA margin would be around 61%, net income margin around 40%, 44% based off that range. What's interesting is their Q1 revenue beat their entire 2020 revenue, which was about 1.2 billion, I believe. So, if I look about valuation, I would annualize their last quarter, right? So that 1.8 times 4, which would equal about 7.2 billion for this year and an annualized rate. Early indications were they were going to go public at about $100 billion valuation. Based on 100 billion over 7.2, you're going to get around a 14x multiple. And then when I look at a higher range, maybe around 150 billion exit valuation, that's a 22x revenue multiple, which actually doesn't seem that outlandish for a company that's growing over 100%, maybe 300% on that annualized number if their future quarters are strong. So I actually think this trade's very high in the beginning. I think there's a lot of volatility in the short term around prices, because I think what the real question would be, is it repeatable? What can they do in the following quarters, and is it going to fall? And that's why I'm kind of interested what Nat thinks about the future of cryptos and Bitcoins and Ethereum, and what the trading and growth of the assets will be like in the next 3 quarters of this year.
It certainly Sorry, Simon. It certainly seems like there's plenty of dry powder waiting on the sidelines in native crypto land, even for the Coinbase IPO. So I could see that being quite volatile, even at 100 to 150 billion.
It doesn't seem outlandish, right? Because at 100 billion valuation, with 1.8 billion adjusted EBITDA annualized, you're looking at a 22x EBITDA multiple. And Nat, Simon, you're from the valuation world. Is a 22x EBITDA multiple that crazy? No.
Not at all.
And especially
not for a high growth company,
And especially not for the crypto native. They're less sophisticated when it comes to revenue multiples. So they'll pay into the triple digits, which I can show you later in this little discussion.
Yeah, on a profitability EBITDA multiple, it's kind of like they're trading cheaply, but like, what do? They have all this money that's falling to the bottom line. They're a cash cow. What do they do? What do they spend this on growth, or do they become a huge dividend payment company, right? Because they make so much cash.
Do you think the company, I don't understand the company as deeply as you guys, but will they actually take some of that free cash flow and buy underlying assets themselves to hold on the balance sheet, or do they already do that? Is that a consideration for any sort of like transactional hedge or whatever they have to think of?
I think that's a no-brainer, following the micro strategy of putting BTC on the balance sheet, and then other things, other assets as well that are under management, and as well as putting cash into, or cryptos into, being validators on specific blockchains as well. So you can just, one of my thought processes, and we can chat about the future later, but is spreading those assets among different blockchains, and instead of decentralizing themselves, simply decentralizing their assets and their influence. kind of like VCs are doing. A lot of VCs are simply acting as validators in different blockchains, verifying transactions, and that's how they're spreading their influence. They could also be a cash cow for a long time as well. If we look at Binance, their competitor, they've launched the Binance Smart Chain. So there is that opportunity for Coinbase to eventually, stop trading shares and tokenize and become a blockchain. But that's, obviously decades off maybe. Those are a few of the thoughts there coming from the crypto side of what they could do. Because you're right, they're going to be sitting on far too much cash here very quickly.
Well, I have a general question. So I know in certain exchanges, well, more so on the brokerage side of things, at least in the public space, a line of business is market making. It's basically, taking one end of a trade and being able to sell it or for whatever small profit, and provide liquidity that way. I know that I don't know this quite as well for crypto. I do know that crypto trades 24/7, if I'm correct. So do you guys know if there's any opportunities to make markets here for, for Coinbase, if that's even a business they might be interested in? Or, is liquidity even big enough to actually make a spread to make money?
Now, you want to go first?
Nah, Simon, tackle this one.
Well, so if you look at the numbers they gave, right, and if you take that 1.8 billion divided by 335 billion of volume, their take rate was 0.5%, which is very, very high in a take rate for an exchange, right? That's going to go down, right? Because as Nat talked about Binance, there's other companies like Kraken, Squares opening up trading, so is Robinhood, right? So from that point, I'm a little bit worried about the revenue growth just from contraction of take rates because competitors are entering the market to offer utility of trading cryptos, and especially Bitcoin and Ethereum, which most of their volume comes from. So that compression will be heavily impacted in going forward, right? I think if they get to where the public, brokerages are today, they make almost nothing off equity trades, right? So it's really important about what they build next, right? About with all this cash that they're generating in the short term, you can't keep these take rates this high forever. As this asset class develops, more people volume trade, and competition enters, they have to go down. So it's what's next for growth for them,
Yeah, because I do see them filling all of Wall Street demands. I think, Suman, you and I have been chatting about their enterprise revenue related to retail revenue. And I'm speaking anecdotally, but most of crypto is just focused on retail revenue, a lot of the central exchanges and decentral exchanges. So they have massive dominance in terms of enterprise trading volume. They'll hopefully just run through Wall Street and get all of the high volatility trading shops, all of them, and put them under their wing. But that'll only be for so long. And then to Suman's point, what's next?
And that should naturally compress the take rate percentage, right? Because 90% of Coinbase's revenue comes from retail right now, where they can charge higher take rates. But the larger the money moved, the smaller the take rates they do, right? To facilitate those transactions and attract the big institutions. So naturally, the weighted take rate will go down over time, like you said, Nat, as more institutions adopt and move money through these pipes.
Staying on the income statement, Suman, how does their EBITDA margin compare to the best fintechs in the world? I'm seeing a shrinking. If I compare central exchanges to decentral exchanges, there's simply less human overhead related to decentralized organizations. So I'm seeing a shrinking of price to sales and price to earnings multiples. How does Coinbase's EBITDA compare to like fintech?
Yeah, I think it's kind of hard, right? Because some of these fintech companies have very different business models, so it's really hard to compare them apples to apples. Mm-hmm. But you can look at some companies like maybe Airbnb, which is a marketplace, right? Connecting a buyer and a seller renting and take a spread. Airbnb has been profitable before, just small profitability margins, a little bit higher free cash flow, but nothing to the point of what Coinbase has done. These marketplaces like ICE and CVOE, they have high margins, but not as high as Coinbase. Gotcha. I think they really just figured out how to solve this stuff with software. I think they're ahead of the time. And to be honest, I think they'll be printing more money than maybe all the public exchanges out there in a year or so. That it's just, what do they do with that cash? And they only get there if Coinbase or the other cryptos and digitals stay at current values or rise.
Yeah. Mm-hmm. I guess, that kind of leads us to the next, or at least me to the next question, as considering if I would actually participate in the IPO or not. I know we talked a little bit about the question of, it's like, okay, there's an intense profitability. Can the company reinvest all that cash into, meaning what meaningful way to, continue that growth. And I think when you mentioned 100% growth year over year, is that top line growth, or what was that again when you mentioned 100%?
That was top line growth,
Okay,
and it's probably growing a little bit faster.
Yeah, so they're basically doubling in revenue compared to last year. So my question is, like, in terms of like the bull case, it's like, what the best case scenario is? It, is it reasonable to take the current quarter and expect that, some sort of like, just multiply that by 4 and extrapolate that out further? Is that the best that we can expect right now in terms of Coinbase? And I think you mentioned a little bit about the secondaries of what Coinbase have recently been transacting on. Do we think, based off of the bull case, the secondary markets are any indication of what we might expect on trading day?
So yeah, in the secondary markets, you can look at the S1. I think the high was around 120 billion, and the weighted price was around 100 billion. That's why a lot of analysts initially expected that, albeit that was before they released those monstrous Q1 numbers yesterday, right?
Yeah.
So I think what you're going to have is a lot of head scratching about what the future of this company is, right? Are they IPOing at a time where revenue might be the highest and it'll decelerate, right? Which is probably what you saw with Affirm, all right? Or DoorDash, right? Are they going to be like that, where those valuations dropped heavily after they IPO'd? Or are they going to be valued more like an Airbnb, where they're like, oh no, you're going to actually go public at a time when revenue is the lowest and we expect a lot more upside, right? And Airbnb increased in value after its IPO at 120 to 180, 190 per share. It's been stabilizing at lately, right? So I think it's really up to, there's a lot of uncertainty when I'd like to get Nat's take here about where crypto's going for the next 3 quarters, the rest of this year and going forward, because I think it's a large uncertain gray area. But for people who are bullish, this is probably something you buy and just hold forever, right? Because you think they're at the center of the market. They're a derivative of all coins being traded. If you think crypto's growing past the 2 trillion market hit recently and growing exponentially from there, it's a no-brainer to probably just buy this and hold on to it. You'll make a positive return. Is it the best return? I'm not sure. I just have to think and hear Nat's take about what's happening with this asset class going forward.
Yeah, let's chat about that, because Bitcoin is still the 1,000-pound gorilla in the room, and I don't care how many people kind of try to move on from Bitcoin, it still dominates kind of just the macro charts here. This is our historical Bitcoin chart, and as you can see, there's quite a 4-year pattern here based on the halving. So if we trust in the halving, and we trust that as Bitcoin rewards per block halve every 4 years, and we have what I deem controlled supply for the first time in human history, we do get programmable money, and that history will repeat itself, in my opinion. We're sitting around here where my mouse is at the moment, in actually a little bit beyond it, in April 2021, and if patterns repeat themselves, we are looking to December 2021 as the peak and as the bubble. And we are starting to see inflated prices in cryptocurrencies, speaking anecdotally as someone who follows it daily. And then we are looking for a bear market in 2022, 2023. So it's an interesting time to buy a Coinbase IPO share. In my opinion, it's an indirect purchase on the trading volume of all of cryptocurrency. Therefore, trading volume should be great in 2021. Price should go up. It should be good times. These are the good times in crypto, and I'm recognizing them. But come 2022, 2023, what happens when trading volume dries up for a lot of your altcoins out there, and the altcoins utility value is still not there for the masses to actually say, decentralized storage, decentralized media, decentralized everything is actually ready to be, I'm ready to drop YouTube for a decentralized equivalent. And I think we're going to have some lean years there where decentralized media is not ready to take over, which I think is the next step after NFTs. And we could see massive decreases in trading volume in 2022, 2023, and that could certainly make Coinbase trading volume stagnant, therefore price and market cap stagnant.
Which is interesting. If you look at that chart, I have a question, Nat,
yes.
Right? That's just Bitcoin, right? Ethereum and these other coins, they don't have the halving, right? So their price might not be similar to this, right? And they might not be highly correlated. So Ethereum could still rise a ton in value. And since it's the second largest coin, it could actually maybe help balance out some of the falling revenue from Bitcoin, because the asset price is going smaller. So their take rate in dollar amounts will be smaller.
Yep,
and Ethereum going up could help offset that, right? And the other coins growing in value, correct?
100%. All of our different altcoins and blockchains have all different emission schedules for their tokens. So some have halving, some don't. And you're exactly right, Suman. In 2013, we didn't have Ethereum that was live and with an ecosystem of lending and borrowing of $100 billion total value locked. In 2017, we didn't have 230 billion locked up in Coinbase. And now in 2021, we do. So some people are looking for those altcoins that deviate and are uncorrelated to Bitcoin. That's like the holy grail in crypto, is find something uncorrelated to Bitcoin that's just going to continue to pump and not adhere to the 4-year cycle. So you're bringing up very valid questions, Simon, that yeah, you're falling on two sides of the camp. Do you believe in the Bitcoin halving and how influential it is? Or is Ethereum the new internet money, and the technological limitations of Bitcoin will be exposed kind of this halving?
It's really interesting, right? Because there's a lot of moving parts. I guess Bitcoin's definitely been the benchmark for a while, but these other coins are growing, so I think that's why it ties back to Coinbase, right? I am a little bit worried about Bitcoin based on what you've shown and their historical price patterns, but this general asset class, if it rises still, Coinbase is still poised to do well. Will their growth slow? Probably, because they're heavily reliant on Bitcoin right now.
Yep.
But it doesn't mean it's not a bad buy it and tuck it away for 5 to 10 years. I'm a long-term investor myself. I don't usually play short-term stuff. If you're bearish or bullish on this market, it seems something that like, hey, you should probably buy this early on and just tuck it away in your back pocket and don't look at it for 10 years, right? That's kind of what the early crypto people said as well.
Yep, exactly right. If you hold this to the late 2020 decade, you should be just fine.
So I've got a question, or I've heard some people refer to maybe Coinbase as a possible like ETF of crypto, or maybe just someone like, for me, like a very easy way to gain access to crypto. I'm no longer on Robinhood, so and I didn't really feel like actually opening up a Coinbase account. So I guess in my opinion, my question is that a fair way to look at Coinbase in this case? And obviously, please explain this to me like I'm a golden retriever and break it down real easy.
Want to take that one?
Yeah, go for it.
Yeah, you're still buying equities just in Coinbase. You're not getting exposure to any of the underlying tokens that sit under, I believe it's 230 in AUM. And really quickly, let me actually share my screen actually in just a second. So it's not a basket of ETFs, in my opinion. It's more like you're getting exposure to the trading volume of all the different cryptocurrencies that that Coinbase offers. And one other thing that you get exposure to that we haven't mentioned yet and is of extreme importance is everybody's trying to find stable coins and non-physically backed stable coins that we can transact over blockchains and, obviously everyone be on the same page. USDC coin is one of the top stable coins in the world, kind of jointly managed, I believe, or jointly created by Coinbase. So the success of the USD stablecoin will actually directly impact the success of Coinbase itself. And if we go to our list of stable coins, and I think I just read an article earlier this week that stable coins, most specifically Tether, is now our most traded pair, and Bitcoin is no longer relied upon as like the most traded pair in crypto to get into and out of crypto. It's actually Tether. So Coinbase also has the second largest stable coin in decentralized finance, doing 1.6 billion in trading volume every 24 hours. So that's one thing that I forgot to mention there.
Got it. So
that's interesting. If you had $1 million, Nat, and you can only choose one, would you choose one coin or Coinbase?
Oh,
if I would choose one of the coins.
Yeah, one or the other, right? Yeah. If I gave you $1 million and said invest this for me, I don't want you to look at it for 10 years. Where do you think you'd put it in?
Well, that's a great question. I would probably put it in the decentralized world. And even though I'm massively bullish Coinbase, I think they'll do really well. And so will investors over the 5 to 10 year time horizon. I still probably won't participate. And I'll show you why. Let's go to Coinbase. Just as the crypto native person, this is where we live. And we can come up here to exchanges. We click on our spot exchanges. If we really want to compare Coinbase, we would compare it directly to Binance. And Binance is a weird one, but it's our best comparable. We can see Coinbase Pro here, which I think it was very smart of Coinbase to break out Pro versus retail. But instead of investing that $1 million into Coinbase, I'd go over to decentralized exchanges. And in my opinion, our decentralized exchanges of the world, we can forget MDEX for now. These are direct competitors to Coinbase, even though I know we're talking centralized services versus decentralized services. So in my opinion, the best decentralized exchange, in my opinion, is Uniswap out there. So I would probably throw it into one of the decentralized exchanges over Coinbase.
Got that. Wait, go back real quick for a second for me
Sure.
on that.
Yeah.
I'm curious of this. So Uniswap, and I want to look at the number 2 and number 3, right? Uniswap and PancakeSwap are doing 2.2, 1.7 respectively in volume in the 24 hours. Go back to the other ones now, the centralized ones.
Yep, and then we'll go up to the centralized.
So they're really not doing that much less than Coinbase and Kraken. This is number 2 and 3 there.
Exactly. Binance is really the outlier in the room, along with Coinbase, for sure.
That's interesting. Okay.
And then it's pretty much everybody else.
Well, maybe you should do another. I'd be interested in doing another class with you where you talk to me a little bit about those decentralized ones, because those seem like maybe a better, higher return investment.
Yeah, we can certainly walk through quite a few of those. Then it gets to, Simon, your point about market making. Market making into the decentralized world is for everybody, not just centralized Coinbase powers. And then we can discuss more about that.
That's pretty cool. Okay, so that's super helpful. I mean, I even have my head spinning right now. I even have some crazy ideas. I know it's not exactly like an ETF like you mentioned, but like, you know, that hypothetical question that Suman just posed, if I give you $1 million, what do you decide? I think there's also some interesting strategies. Can you buy long-term put options on Coinbase when it comes out and go deep underlying coins as a potential hedge? Because, you know, you're so net bullish, so net long on these coins. Maybe that put on Coinbase provides some sort of downside protection. No? So then, you know, when you know shit hits the fan, you're not just sitting there hoping for diamond hands.
I can diamond hand though. I don't mind doing it.
To kind of wrap everything up, let's just kind of go around the circle. Well, mainly you two. Suman, why don't you start out and just let us know what the key bullet points that you have in terms of takeaways, in terms of net bearish or net bullish look on Coinbase, and then Nat, if you can follow Suman afterwards, that'd be super helpful.
I'm net bullish and I'm a buyer at the right price. You know, I'm not as heavily into other cryptocurrencies like Nat is. So for me, I think this is a great way to gain exposure to the rise of this market. And I really liked what Nat said about the future with all this cash that they could do to build their own blockchain. I am very bullish on blockchains. And if they get that right, they will continue to be a cash cow and grow revenue very strong in the future. Blockchains are the future. This is a step for them in the right direction. So net bullish, and I'd buy at the right price and hold for a long time.
Nice. I'm net bearish, and I can't believe I'm saying that. And only because I'm very bullish on the asset class, but I'm actually bearish on the organizational structure, and I need to see that change. And I'm talking about the centralization that is Bitcoin. So I'm a bit of a purist there in terms of decentralization. That may hurt my wallet. Valuation's a little high, but it is valid given the two numbers that crypto mostly focuses on right now, which is trading volume and assets under management, or how crypto likes to call total value locked. So the total value locked of Coinbase at 230 over double that's double DeFi per DeFi llama. It's about 100 billion right now in DeFi. So there's no doubt Coinbase is dominant. No doubt they're going to perform well and be a cash cow in the future. So that net bearish is just because of their organizational structure, which financially might not be a good decision.
Great, that's helpful. And I think kind of in the future, what I'm going to do is I'll probably do an options play when Coinbase lists. So we'll kind of see where I end up with all of this. So thanks again, guys.
Thank you.
Thank you.